What's up, crypto family? Bony here. And if you thought the crypto market was wild before, wait until you hear what happened in just the last 5 days. Bitcoin just smashed through $124,000, a brand new all-time high, while Ethereum is literally inches away from its own record. But here's the kicker. We also saw over $1 billion in liquidations that shook the entire market. In today's episode, we're doing a complete deep dive into the most explosive 5 days in crypto history. I'll break down exactly what triggered Bitcoin's record run, why Ethereum is about to make its own history, and most importantly, I'll give you my exact 48-hour trading strategy with specific entry and exit points that could make or break your portfolio. We've analyzed data from over 15 professional sources, including CNBC, CoinDesk, and top technical analysis platforms. This isn't just hype, this is fact-based analysis that institutional traders are using right now. And by the end of this video, you'll have the same information that's moving billions of dollars in the market. But before we dive in, I need you to do 3 things. First, smash that like button if you want more deep dive crypto analysis like this. Second, subscribe and hit the notification bell because the crypto market moves fast and you don't want to miss these opportunities. And third, drop a comment telling me, are you bullish or bearish on Bitcoin at $124,000? I read every single comment and I'll respond to the best ones. Alright, crypto warriors, let's get into the data. What I'm about to show you will change how you think about this market forever. Let's start with the headline that shocked the world. Bitcoin hitting $124,496 on August 14th. But this wasn't just a random pump. This was the result of specific catalysts that I predicted in my previous videos. The trigger? Tuesday's inflation report came in cooler than expected, which immediately sparked hopes for Federal Reserve rate cuts in September. But here's what most YouTubers won't tell you. This rally was different. Wall Street volume was almost non-existent during the record high. That's a red flag that institutional traders like Christopher Lewis from Daily Forex are warning about. When Bitcoin hits records on light volume, it often means the move isn't sustainable without broader institutional participation. Now let's get into the technical analysis that's crucial for your trading decisions. According to professional analysis from Liquidation Forex, Bitcoin's momentum is still up, but there's a critical level you need to watch, $118,617. This is the make or break level for the next 48 hours. If Bitcoin holds above $118,617, we could see targets at $119,831, then $120,796, and potentially $122,113. But if it breaks below, watch for support at $117,387, $116,407, and the major support at $115,668. These aren't random numbers. These are levels where institutions are making billion-dollar decisions. Here's where it gets interesting. We have conflicting signals. The RSI is showing bullish divergence, which typically signals more upside. But the stochastic oscillator is overbought, and FX Pro's wave analysis shows strong resistance at $122,770, where Bitcoin got rejected. This is why professional trading requires understanding multiple indicators. But Bitcoin isn't the only story. Ethereum is about to make its own headlines, and what's happening there might be even more significant for your portfolio. While everyone was watching Bitcoin, Ethereum quietly climbed to $4,791, just $75 away from its all-time high of $4,866. But here's the kicker. Ethereum has gained 85% since June, massively outperforming Bitcoin. This isn't luck. This is institutional money recognizing Ethereum's unique value proposition. According to our analysis, Ethereum's rally is driven by 3 key factors: heavy institutional buying, tightening supply from the proof-of-stake transition, and adoption from corporate accumulators. The regulatory environment, has also become much friendlier, with SEC Chair Paul Atkins launching Project Crypto to create clearer guidelines. From a technical perspective, Ethereum is trading in a rising channel that's been intact since April. CoinSpeaker analysis shows Ethereum has triggered what they call the rarest signal in history. When you combine this with the proximity to all-time highs, we could be looking at a massive breakout. The supply dynamics are crucial here. The EIP 1559 fee burning mechanism means that when network activity increases, more ETH gets burned, creating deflationary pressure. Plus, the proof-of-stake transition eliminated the constant selling pressure from miners. This is basic economics. Reduced supply plus increased demand equals higher prices. My prediction, if Ethereum breaks above $4,866, we could see a rapid move to $5,200 or even $5,500. The institutional FOMO will be real once that psychological barrier is broken. Now, let's talk about the elephant in the room. The $1 billion liquidation event that rocked the market. XRP was hit hardest, dropping 7% from $3.34 to $3.10 in just 24 hours. But this wasn't random. This was triggered by hotter than expected wholesale inflation data that caught leveraged traders off guard. This liquidation event tells us something crucial about current market structure. Leverage usage is still extremely high. When macro data surprises the market, we get these cascade liquidations where stop losses trigger more stop losses. XRP's trading volume hit 437 million units in a single hour, one of the largest this quarter. The altcoin performance during this period reveals a key trend. Institutional money is concentrating in Bitcoin and Ethereum, while altcoins face selling pressure. This is market maturation in action. As institutions enter crypto, they prefer the liquidity and regulatory clarity of the top assets. But here's the interesting part. XRP showed late session buying at the $3.05 to $3.09 support zone, suggesting institutional accumulation. This pattern often precedes recovery rallies, so keep XRP on your watch list. Here's the news that could change everything. Treasury Secretary Scott Bessent announced that the US will use forfeited Bitcoin to form a strategic Bitcoin reserve. But more importantly, they're exploring budget-neutral pathways to acquire more Bitcoin. This is huge. We're talking about potential government accumulation beyond just seized assets. Michael Saylor continues to lead corporate Bitcoin adoption, with MicroStrategy's holdings now worth $74 billion. His recent statement, "If you don't stop buying Bitcoin, you won't stop making money," reflects a conviction that's generated over 6,104% returns. That's not luck. That's strategy. Saylor's predicting Bitcoin will hit $1 million in the next few years, and he's backing it up with specific catalysts. Trump administration support, Treasury Secretary backing, SEC Chair Paul Atkins cooperation, and increasing bank custody adoption. When someone with $74 billion in Bitcoin makes predictions, you listen. The institutional infrastructure is rapidly developing. We have regulatory clarity improving, bank custody solutions expanding, and traditional financial systems integrating crypto. This isn't speculation anymore. This is institutional adoption at scale. All right, this is what you've been waiting for. My exact 48-hour trading strategy based on all this analysis. I'm going to give you specific entry points, targets, and stop losses that institutional traders are using right now. But remember, this is not financial advice. Always do your own research and never risk more than you can afford to lose. Bullish scenario. If Bitcoin holds above $118,617 with volume confirmation, consider long positions targeting $119,831 first, then $120,796 and $122,113. Use a stop loss below $117,387 for a risk-reward ratio of about 3-to-1. This scenario is supported by RSI bullish divergence and continued institutional adoption. Bearish scenario. If Bitcoin breaks below 118,617 with volume, consider short positions targeting 117,387, then $116,407, and potentially $115,000. Use a stop loss above $119,831. This scenario is supported by overbought stochastic conditions and strong resistance at $122,770. Risk management is crucial. Never risk more than 1 to 2% of your portfolio on any single trade. Use trailing stops to protect profits. Monitor macroeconomic news closely because this market is now highly sensitive to Fed policy and inflation data. Set alerts for key levels and be ready to exit quickly if conditions change. For Ethereum, watch for a break above $4,866 with volume for targets at $5,200 and $5,500. Support is at $4,500 and $4,200. The risk reward is excellent here, given the proximity to all-time highs and strong fundamental drivers. Let me summarize the key takeaways from this analysis. Bitcoin hit $124,000 but faces critical resistance. Ethereum is inches from its record with strong fundamentals. The market saw $1 billion in liquidations, showing high leverage risk. Institutional adoption is accelerating with government support, and we have specific trading levels for the next 48 hours. Looking ahead, this market is evolving rapidly. The integration with traditional finance brings opportunities and risks. Regulatory clarity is improving, but macro sensitivity is increasing. The next few months could determine whether we see Saylor's $1 million Bitcoin prediction start to materialize. I want to hear from you in the comments. Are you trading these levels? What's your take on the institutional adoption trend? And what crypto topics do you want me to cover next? Your engagement helps me create better content and helps the YouTube algorithm show this to more crypto enthusiasts like yourself. If this analysis helped you understand the crypto market better, smash that like button. Subscribe for more deep dive content and share this with anyone who needs to see it. The crypto market never sleeps, and neither do we. I'm Bony. This has been your crypto market deep dive, and I'll see you in the next episode. Stay profitable, crypto family.